In this presentation, we will take a look at multiple choice questions related to governmental accounting, going through those questions and then practicing test-taking skills with them. First question, when principal and interest payments are made, the governmental activities accounts either A, show the principal payment only, B, show the interest payment only, C, do not record the transaction, or D, show principal and interest payments. Let's go through this again using the process of elimination. When principal and interest payments are made, the governmental activities accounts, what are they going to show? So whenever we think about these type of activities, recording transactions, we want to think, are we on the government-wide activities, the entity as a whole, on an accrual basis, or on the fund accounting, possibly the largest fund, governmental funds, on a modified accrual basis? Here we're in the governmental activities. That's going to be the entity as a whole. So that would be what we would normally expect, because that's going to be on the normal type of accrual basis. So when principal and interest payments are made under normal kind of accrual accounting, we would record both of them, right? We would credit cash, we would debit interest expense, and debit the payable, the bonds payable, you would think. So knowing that, let's go through this. A, show the principal payment only. Well, no, we would show both, because we're on the government-wide side, which would be kind of normal. If we paid both of them, we'll show both of them. B, show the interest payment only. No, same reasoning. C, do not record the transaction. No, we're going to record the transaction typically because we're on normal accrual accounting. D says show principal and interest payments. That then is the one. Final answer, when principal and interest payments are made, the governmental activities accounts, D, show principal and interest payments. Next question. Financial statements for a debt service fund, either A, statement of net position, B, statement of revenues, expenditures, and changes in fund balance, C, balance sheet and statement of revenues and expenditures and changes in fund balance, or D, balance sheet, statement of revenues, expenditures, and changes in fund balance, and statement of cash flows. Okay, so let's go through this again using the process of elimination. Financial statements for the debt service fund. Okay, so when we think about the financial statements now, we can think of them again for the government-wide accounting, the entity as a whole, and then on the fund side of things. So now we're on the fund side of things. Debt service fund, that's going to be a fund that's a governmental fund, and therefore using a modified accrual basis as opposed to the full accrual basis. So that means that we're going to have the flow activity kind of happening, and we're not going to have long-term liabilities, and we're not going to have long-term assets, but only the current activity in it. So first we have the statement of net position, as if that's the only thing. Pretty much all these items, you would think you'd have a statement of net position, like a balance sheet type of statement, or some type of balance sheet type of statement, and some type of income statement activity type of statement. So you would think it wouldn't be just A. B says statement of revenues, expenditures, and changes in fund balance. And so now we have that's one statement. It's a really long name for like the income statement type of statement. And again, you would think you'd have both a balance sheet and an income statement at the least. So I would think it wouldn't be A or B. C says the balance sheet and statement of revenues, expenditures, and changes in fund balance. So now we have a different name. We've got a balance sheet as opposed to the statement of net position. They're both kind of balance sheet-ish type terms. And we have what you would think of basically the income statement. So that would be the minimum. Like you would expect that to be the case. So I'll keep that one for now. And then D says the balance sheet, statement of revenues, expenditures, and changes in fund balance. That's all one statement. And the statement of cash flows. So D adds in the statement of cash flows. Now, you kind of would think, well, the D is the complete set. You got the balance sheet equivalent, balance sheet, and then the income statement equivalent and the statement of cash flows. But we're actually going to be with C because it's the modified accrual basis, and therefore we're almost on a flow type basis already, given the fact that we're on the modified accrual basis. So we don't have the statement of cash flows. So it's not D, it's actually going to be C. Final answer. Financial statements for the debt service funds include C, the balance sheet and statement of revenues, expenditures, and changes in fund balance. In essence, balance sheet account and the related income statement type of account.